Right now, we're going to take a mini 25-question practice exam to test your study skills. So let's get started, and good luck. Howard is actively licensed as a real estate agent in Utah, but is currently in military and stationed in Arkansas. Howard wishes to practice real estate in Arkansas. What must Howard do to obtain an Arkansas license? A. Complete the 60-hour pre-licensing course and pass the licensing exam. B. Pay the fee and provide evidence of Utah licensure. C. Complete a 12-hour Arkansas law cram course. D. Active military personnel cannot practice real estate. And the answer is B as in boy. Pay the fee and provide evidence of Utah licensure. AREC must license non-resident veteran or active military service members if the service member is active and stationed in Arkansas, has paid the initial licensure fee, and provided evidence of a real estate license in another state. Sally and Casey are both real estate salespeople in the same office. Casey has obtained a buyer interested in making an offer on property listed by Sally. What is required before they can move forward? A. They cannot move forward. One of them must refer his or her client to another office. B. Sally must appoint Casey as a sub-agent. C. Nothing is required because the buyer and seller each have separate representation. D. Each client must give informed consent that the company to act as a dual agent. And the answer is D as in dog. Each client must give informed consent that the company to act as dual agent. This is a dual agency because both parties are represented by the same broker. Each client must give informed consent for the company to act as a dual agent. Referring one of the clients to another office would eliminate the dual agency, but elimination of dual agency is not required. Sub-agency is a form of single agency created between brokers. In Arkansas, real estate licensees must conduct all real estate related activities in the business name and under the supervision of A. Associate broker, B. Principal broker, C. Executive broker, D. Office manager. And the answer is B as in boy, principal broker. All real estate licensees practicing in the state of Arkansas are required to conduct all real estate related transactions through the business name of the licensee's principal broker. This includes transactions involving property the licensee owns or intends to own. Administrative rules and regulations to define the statutory law and provide guidelines for compliance are created by the A. Executive Director of the Arkansas Real Estate Commission, B. Arkansas Real Estate Commission, C. The Attorney General, D. The Governor. And the answer is B as in boy, Arkansas Real Estate Commission. Administrative rules and regulations to define the statutory law passed by the Arkansas legislature and provide guidelines for compliance are created by the Arkansas Real Estate Commission. The rules and regulations have the full force of law unless they conflict with a statute. Unless otherwise agreed between the parties, who pays the transfer tax? A. It is equally split between buyer and seller. B. The seller. C. The buyer. D. The listing broker. And the answer is A as in apple. It is equally split between the buyer and seller. Unless they agree otherwise, the transfer tax is split equally between the buyer and the seller. The amount collected is $3.30 per $1,000 of the exact purchase price of the property. If you like these questions, you can get thousands more just like them. We have an online exam prep package that you can buy to get instant access to our database of study resources like unlimited practice exams, vocabulary flashcards, and an ebook study guide that explains concepts and math formulas you'll need to know for your Arkansas real estate exam. The link for that is in the description and comments below. All right, back to the questions. In Arkansas, a blind ad, A, is illegal, B, permitted with the seller's written permission, C, is permitted if it is written under the supervision of the principal broker, D, is permitted for the sale of commercial property. And the answer is A as in apple. It's illegal. A blind ad is a real estate advertisement placed by the licensee or real estate firm displaying only the licensee's name, post office box address, or individual phone number so that the consumer is led to believe the advertisement was placed by an unlicensed person. A blind ad is illegal in Arkansas. To own a real estate firm, a person, A, must have a real estate broker license, B, must have a real estate broker license and operate as a corporation, C, is not required to hold a real estate license, D, is not required to hold a real estate license but must operate as a corporation. And the answer is C as in Charlie, is not required to hold a real estate license. The owner of a real estate firm is not required to hold a license to operate as a business entity. However, there must be a licensed principal broker in charge. In Arkansas, dual contracts are A, illegal, B, legal if there is full disclosure to all interested parties, C, legal if recommended by a real estate licensee, D, legal if approved by AREC. And the answer is A, it's illegal. A dual contract is a real estate practice employed to obtain a loan by fraudulent means. This practice is illegal on state and federal standards. Two offers are written by the buyer and accepted by the seller for two different purchase prices. One price is the actual purchase price, and the second higher price contract is provided to the lender who makes the loan based on the higher price. How often is a timeshare plan required to be renewed? A, monthly, B, every 2 months, C, annually, D, every 2 years. And the answer is C as in Charlie, annually. Timeshare plan registrations are valid from July 1st through June 30th. Annual renewals must be filed no later than June 1st. Real estate licenses are eligible for renewal without penalty between A, July 15th and September 30th, B, January 1st and March 15th, C, March 15th and May 30th, D, anytime. And the answer is A as in apple, July 15th and September 30th. Arkansas real estate licenses are valid from January 1 through December 31st of each year. Licensees are eligible to renew between July 15th and September 30th without penalty. The price at which a parcel of real estate ultimately sells is determined by A, the demand for the type of property, B, supply and demand, C, an appraisal, D, prevailing interest rates. And the answer is B as in boy, supply and demand. An appraisal is a professional estimate of market value. It does not determine a sales price unless the parties agree to determine price that way. The real estate market is always local. Ultimately, local supply and demand determine that a buyer and seller will agree on. Demand for the type of property and interest rates affect demand, but that is only one side of the supply and demand equation. When conducting a comparative market analysis, a CMA, a real estate licensee should not take into consideration which of the following: A, the seller's original purchase price; B, properties that have been listed but not sell at their listed price; C, comparable properties that have not sold; D, properties that are similar in style, size, and features. And the answer is A as in apple, the seller's original purchase price. The seller's original purchase price is not relevant for a CMA. Although properties that sold provide the best results, listed property that sold for less than the listing or did not sell at all are still considered valuable information. Net operating income is equal to A, potential income minus expenses minus debt service; B, effective gross income minus potential income; C, potential gross income minus vacancy and credit loss minus expenses; D, effective gross income minus vacancy and credit loss. And the answer is C as in Charlie, potential gross income minus vacancy and credit loss minus expenses. Net operating income, or NOI, is always income after vacancy, credit loss, and expenses. It does not, however, include debt service. In Arkansas, transfer of title to real property owned individually by a married person, A, only requires the signature the spouse who individually owns the property; B, requires a quitclaim deed by the spouse; C, can only be effected with an affidavit of dower; and D, requires the spouse's signature as grantor of the deed. And the answer is D as in dog, requires the spouse's signature as grantor of the deed. In Arkansas, transfer of title to real property owned individually by a married person requires the spouse's signature. A licensee in Arkansas should always ask whether the owner of record of real property is married before marketing or making an offer on real property for a client. The acceptance of an offer occurs when A, the seller signs the offer and provides the buyer or buyer's agent a copy of the signed document; B, the seller signs the offer; C, the seller and the seller's licensee sign the offer and provide a copy of the signed document to the buyer or buyer's agent; D, the seller indicates a willingness to accept the terms of the offer. And the answer is A as in apple. The seller signs the offer and provides the buyer or buyer's agent a copy of the signed document. The parties to a purchase contract are the buyer and seller. The seller must communicate acceptance in writing to the buyer, which can be done by communication to the buyer's agent. The licensees are not parties to the contract, and their signatures are not required to form a contract. Licensees are required to review offers and sign the offer to show they reviewed it. The highest form of ownership interest one can acquire in real estate is the A. legal life estate, B. conventional life estate, C. defeasible fee simple estate, D. absolute fee simple estate. And the answer is D as in dog, absolute fee simple estate. The fee simple freehold estate is the highest form of ownership interest one can acquire in real estate. It includes the complete bundle of rights and the tenancy is unlimited with certain expectations. The fee simple absolute estate is a perpetual estate that is not conditioned by stipulated or restricted uses. Salesperson Sally had her license revoked by the Arkansas Real Estate Commission. What happens to her pending transactions? A. They are suspended until new representation is found. B. Sally's principal broker must complete the transactions without a salesperson. C. Sally must compensate the parties for any damages they suffer. D. Nothing, because agency relationships are formed with the brokerage, not the salesperson. And the answer is D as in dog. Nothing, because agency relationships are formed with the brokerage, not the salesperson. Sally does not have a direct agency relationship with any of the parties in the brokerage transactions. Her principal broker still has responsibility for the transactions. In the income capitalization approach, an appraiser, A, estimates gross income and multiplies times the gross income multiplier. B, estimates effective income, subtracts tax, and applies a capitalization rate. C, estimates net income and applies a capitalization rate to it. D, estimates potential income and applies a capitalization rate to it. And the answer is C as in Charlie. Estimates net income and applies a capitalization rate to it. The steps are: estimate potential gross income, estimate effective gross income, which is potential minus vacancy and credit losses. Estimate net operating income, which is effective minus total operating expenses. Select a capitalization rate and apply the capitalization rate. This formula is income divided by cap rate equals value. One difference between a cooperative estate and a condominium estate is that A, a condominium owner owns a unit of airspace, whereas the co-op owner owns a proprietary lease. B, a condominium sale adversely affects other unit owners. C, the co-op owner owns stock and a freehold real estate interest, whereas the condominium owner simply a proprietary lease. D, the condominium owner owns the common elements and the airspace, whereas the co-op owner only owns the apartment. And the answer is A as in apple. A condominium owner owns a unit of airspace, whereas the co-op owner owns a proprietary lease. The owner of a condominium has a fee simple ownership interest in his or her unit and its airspace, whereas a co-op owner has a leasehold, not fee simple, interest with the property's corporation. Since the corporation owns an undivided interest in the cooperative property, debts and financial obligations apply to the property as a whole, not to the individual units as in a condominium. The term of an Arkansas real estate commissioner is A, determined by the governor, B, 2 years, C, 3 years, D, 4 years. And the answer is C as in Charlie, 3 years. The Arkansas Real Estate Commission has 5 members, all of whom are appointed by the governor and serve a 3-year term. The buyer and seller, represented by separate brokers, have selected a third-party closing agent to conduct the closing. Who is responsible for drafting the closing instructions? A, the parties must select one of the licensees to draft instructions. B, the third-party closing agent is responsible for drafting instructions. C, the parties are responsible for drafting instructions. D, the licensees are responsible for drafting instructions. And the answer is D as in dog. The licensees are responsible for drafting instructions. If the parties, buyer, seller, select a closing agent to close the transaction, the licensees must provide written closing instructions on behalf of the licensee's client to the third-party closing agent and review the client's closing settlement statement, if available, to ensure the closing is conducted according to the agreement of the client. Licensees are permitted to buy property for themselves. A, the licensee has written authorization from the licensee's principal broker. B, the licensee has written authorization from AREC. C, the license status is kept confidential. D, full disclosure is made to all parties that the buyer is a real estate licensee. And the answer is D as in dog. Full disclosure is made to all parties that the buyer is a real estate licensee. When a licensee is acting as on the licensee's own account, full disclosure of the license status is required. A licensee does not need anyone's authorization or permission. The members of the Arkansas Real Estate Commission are A, elected, B, hired by the Commission's executive director, C, appointed by the governor, D, selected by the legislature. And the answer is C as in Charlie, appointed by the governor. The Arkansas Real Estate Commission has 5 members who are appointed by the governor. 3 members must have been Arkansas real estate licensees for at least 5 years. The other 2 are appointed to represent consumers and cannot have real estate licensees or engaged in or retired from the business of real estate. One of them must be of at least 60 years old and represent the elderly. Complaints against real estate licensees are investigated by the A, Arkansas State Police, B, Secretary of State, C, Arkansas Real Estate Commission, D, Attorney General. And the answer is C as in Charlie, Arkansas Real Estate Commission. Complaints against real estate licensees and unlicensed persons engaged in real estate activity are investigated by the Arkansas Real Estate Commission. Let me know how many questions you got right in the comments below. Remember, you can get more practice exams in our exam prep package. The link for that is in the comments and descriptions below. All right, everyone, that's all for today, and I'll see you next time.